Good evening, guys. It is Thursday, February 20th, 2025. This Bathrobe business. I'm George Yoganov. I've got a little bit of decaf coffee left because it's almost time for bed, but I also have the news. So we made it. It's the end of the week. I always consider Thursday as Friday. I don't know. My fiance says I'm weird because of that. Thursday just feels like a Friday, like because I feel like going to work on a Friday. It's like it's Friday. It doesn't matter. You could phone it in. Nobody gives a shit, right? I don't know. That's my feeling anyway. But then for me also Sunday becomes like Monday. Like I hate Sundays. I always have. And so I guess I have like a daylight savings effect when it comes to the weeks because Thursday is Friday and Sunday is Monday. So I just shift everything by one day. But for me, it's Friday and it's the last video of the week. So if you saw the thumbnail headline story, I think the recession has started. And I'll elaborate on that in just a minute. And a slight exaggeration. I don't necessarily think we're going to see a true recession, but I think that there's a chance. I'm going to mess with my mic here. I think it's a little too loud. But I think that we're definitely going to see a strong regression. I've talked about on this channel now for a couple weeks about how we're going to see a more muted 2025. I think recession is definitely a possibility. Technically, a recession, even though they changed the definition, was 2 consecutive quarters of shrinkage, right, of a shrinking economy, of negative growth. Technically, we hit that. Was it last year? I think the previous year during the Biden administration, but then the following subsequent quarters it recovered, so it didn't count. But I do think that there's a possibility that we could see a sustained shrinkage this year, and potentially a true recession in one form or another. Before we get to that, I'm going to share 2 stories. The first is about my favorite subject in the world. It's gold. So Goldman Sachs came out with their new prediction of where they think the target gold price is going to be. Not a very interesting article. Essentially, all it's saying is they think it's going to end up being around 3,100 this year by the end of year. I think that's an underestimate. I think that's a drastic underestimate. I would say, given the current trends, gold is probably going to hit 3,500 because let's be honest, we're just barely below 3,000. Like we're just coming up and just tickling the bottom of 3,000, just barely under there. And if you're watching the video and this looks gross, it's supposed to. It's supposed to. That's exactly what you think it is. So I think that gold is definitely going to flirt with that 3,100 a lot sooner than Goldman Sachs says, given the trajectory it's been taking in just the first few months. Now, a few things that could affect it. There's talk of the end of the Ukraine war. If that happens and global markets open up, I would expect gold to drop. That could happen. You could also probably imagine some scenario where gold could still rise because of more purchase in the open market. I don't think that's going to happen. The only reason I say that is because supposedly the new Russian ruble is backed by gold, so there could be a scenario where that plays out. But I think overall global tensions dropping would ease concerns, ease inflation, and we would see a drop in gold prices. So that could happen. But barring that, I don't think we're going to see gold dropping drastically. I think that overall, I think this trajectory is going to maintain. We'll see what happens with it. I don't want. There's not much to the story, so I'm not going to talk too much about it. But I would say 3,500 is probably a good estimate for the end of the year. So, this article I'm going to mention is about Japanese inflation. I know I try to keep this channel mostly tied to American economy and American business, but the reason I talk about this is there's a strong link between Japanese lending rates and the United States economy. And so there's talk that they're going to raise their interest rate once again. I think this would actually be the third raise and third consecutive one. But this has been the first time the government has moved to raise interest rates in close to 20 years. And when they do that overnight, well, not just overnight lending, but lending in general in the global market usually contracts because now the cost of borrowing is much higher. When that happens, it does have effects on the United States economy. SoftBank being a great example. SoftBank borrows some of these bonds and is able to lend globally. And so this does have effect on the U.S. economy. We'll see what happens this time around. But I think this will, in one way or another, draw money out of the capital markets because that money is just becoming too expensive to lend out. So now let's get to the headline story. Actually, I lie. Before we get to the headline story, let's talk about Amazon. So Amazon has surpassed Walmart in revenue for the first time in history. Now, a bit of a misnomer because this is a quarterly result, not annual. So, Walmart reported 180.5 billion net sales in the fourth quarter, while Amazon reported 187.8 billion. So, not a small margin. They blew past Walmart pretty substantially. However, one thing to note is again, this is quarterly. Annually, Walmart still wins. And this is all of Amazon's suite of products. So this is cloud computing, this is advertising revenue, seller service business. So everything that encompasses Amazon itself, AWS, all that stuff. This is a total revenue, not just retail alone. If you factor in just retail alone, Walmart is still a behemoth. So I'll give you the stats real quick. Or does this article not have it? Maybe this article didn't have it, but yeah, Amazon blew past Walmart for the first time in history. The stats I really want to talk about are Walmart, and this is why I say that the recession is here. So Walmart shares drop as retailer says profit growth will slow. Walmart topped earnings and revenue estimates for the fiscal fourth quarter, but said profit will grow slower with the current fiscal year. They had good revenue, 66 cents per share versus an estimated 64 cents per share, and 180.55 billion versus 180 billion.01 expected. In the 3-month period that ended on January 31st, Walmart's net income fell to 5.25 billion or 65 cents a share, compared with 55.49 billion and 68 cents a share from a year ago. So they're facing headwinds starting into the new year. I'll talk about their earnings real quick in the previous quarter, because Walmart did see actually fantastic growth. So I do think it's worth mentioning. So Walmart shares the experienced holiday growth was about 4% in e-commerce and shot up about 20% in the United States. So their e-commerce sales alone was up 20%. Their regular revenue shot up 4% from a previous year. Walmart is seeing fantastic growth overall. It expects net sales to go about 3 to 4% and adjusted operating income to increase about 3.5 to 5.5. One of their greatest gains has been in online retail. So this is something that actually I subscribe to, is they're winning a lot of shoppers over the $100,000 income mark. So shoppers that traditionally didn't shop at Walmart do shop there now because of their online retail and food delivery. Not that I'm a high value customer or anything like that. I've always shopped at Walmart, but this is a service I take advantage of. We order food from Walmart all the time. In fact, one of the reasons we do is Smith's is literally 2 minutes from our house. Like, we're within 2 minutes drive of the Smith's. Walmart is about 8 minutes away. But Smith's doesn't offer delivery, or if it does, I think it ended up being more expensive than Walmart. So we are now doing 90% of our shopping at Walmart simply because it's so much more convenient. You make an order, it's delivered, it's ready to go. Whereas Smith's, you got to get in the car, you got to go pick out your stuff, et cetera, et cetera. So it's definitely going to be a powerful stimulus for growth. I think they're going to see extended growth in that market, and it's going to lure more and more shoppers. However, again, I keep bearing the lead. Walmart is saying that they're going to be seeing slower growth for the year. This is now the 100th company that we've reported on this channel that is seeing strong headwinds and is saying that 2025 is going to be slower growth. In addition to every company that we've reported, we've seen the rail statistics and the freight travel across the United States. That's one of the greatest indicators. Remember, that was an indicator I brought you guys back in May or June of 2025, when everybody was saying that, oh, maybe we're going to see muted sales. And we were looking at the freight trains and the freight movements across the United States, and it was stronger than it had been in the previous year. And I said, no, I think we're going to see a really strong economy. And then sure enough, in the third and fourth quarter, we saw very strong retail sales, Walmart included. Well, now those same statistics from the freight rail are showing that, no, actually, it's going to be slower. It's going to be something like what we saw pre-COVID, essentially a return to normalcy, but a muted growth nonetheless, much closer to what was traditional growth pre-COVID. So because of all these factors, I think that we're going to see a possible recession. In addition, to underscore this, another company that reported the same was Rivian. So Rivian beat its fourth quarter expectations. Now, it still reported a loss. It is still more or less a startup. It was 46 cents a share loss versus 65 cents expected, but revenues of 1.73 billion versus 1.4 billion expected. But again, a company that is saying that 2025 is going to have strong headwinds. And lastly, I'm going to talk about this one, is Texas Roadhouse. So Texas Roadhouse had a fantastic fourth quarter. I'm not going to, this article is behind a paywall, but essentially what it's saying is the first 7 weeks of the new year are stunted growth. So we're seeing it across multiple sectors. Every single sector from tech to retail to food and beverage is reporting a bad start to the new year. And this is before the tariffs are really factored in. Remember, Trump is threatening tariffs, but very few have actually come into place. There's some reciprocal tariffs that come into place. I think the Chinese tariffs did actually end up happening, but the tariffs against Canada have not occurred, against Mexico have not occurred. So the large majority of the brunt of the tariffs that could come down the pipeline have not affected this economy yet. And if when they do come into play, we could definitely see a possible recession. So I'll be the first to say it here. I think a recession is on the horizon. I think it's very strong and very powerful. We'll see what happens with the numbers that come out in February. And really, I think the first quarter revenues of a lot of these companies will give us a glimpse into what the next 3 quarters are going to look like. But as I've said on this channel, I think we're heading towards strong headwinds, and I think a recession is coming. That's pretty much it. So that rosy note is how I'll end today's episode. So I hope you guys enjoyed it. I hope you guys have a fantastic Friday, and I'll see you guys back here Monday. Have a great weekend. Bye.